so much for joining me tonight at the Bottom Line Live. I'm going to share this real quick like I always have to do, and why that's probably the first sentence I say every single time. Let me share this real quick into the group. And I'm going to talk to you guys all about taxes tonight. So I pretty much have nothing else on my brain. We've been getting prepped for taxes. Every CPA is asking if their clients' books are ready yet, and they're all pretty much ready at this point. It's been an interesting journey. I don't think I've had a lot of sleep since the beginning of the year because it was 1099s and payroll deadlines, and now it's tax season. Okay, good. So I have shared that. Good. So I wanted to tell you guys kind of, where everything's at, where tax season is at, what your CPA is going to want from you, all that good stuff. So let me get started. Okay, first of all, though, I just want to say, if you have access to your books and you're using it to write invoices or, enter bills, make sure, I promised my bookkeepers I would say this, make sure that you get training from your bookkeeper or your CPA on how the correct flow, the workflow of those things go, because we've been having to clean up a lot of entries that clients made thinking they're doing it right, and they've been getting emails from me saying, can you not do this? And I'm sure I offended them all because nobody likes being told that they're doing it wrong. But that's why you hired us, because we're bookkeepers. So let us train you on the workflow so that you're not paying us extra to clean up, entries that you made incorrectly. Because I know a lot of you want to help. So if you want to help and you want to enter transactions, make sure that look at the history. How did you enter it before? You know what it's for, but you might not know what category it's been used in your books to do the bookkeeping for it. If you see there was an adjustment made, you can't use the account called reconciliation discrepancies. That's literally only it's used on reconciliation discrepancies, and we try to never use it because it looks like we don't know what we're doing if you have to create an adjustments account. But if the bank made an adjustment, you would use bank fees. You know what I mean? Stuff like that. So I just want to, because I promise my bookkeepers, if you are using your books as well, if you are trying to help, just make sure you get training so that you know what you're doing, so you're not helping and paying extra because you helped. So let's keep that in mind. Okay, now, for all my business people out there, which I know is most of you, the tax deadline or extension deadline is March 15th. And I haven't checked, if that falls on a weekend, then it's the Monday after. I haven't checked that because I've been too buried into the books that I haven't actually looked at that. But that is coming up. So right now, what we've been doing for all our clients is reviewing all their books for the year, which has been quite an evolution, and then asking them any final questions that we're not sure about, cleaning things up that either they entered incorrectly, that maybe we entered incorrectly, which we obviously don't charge for. If we're like, oh, look, one of the bookkeepers made this entry that's incorrect, let's fix it. Or if they had prior bookkeepers that entered things weirdly, we're getting that cleaned up, making sure all the payroll downloads are correct, everything like that. So the books are perfect to send to the CPA, because the CPAs are all asking us for books. Now, I know most of you are going to file an extension, and that's totally fine. You probably should. There's lots to get done. I don't know, the IRS is crazy. There's lots to get done between January 1st and March 15th to be able to file business taxes. Before I owned a business, I could file my personal taxes on time by April 15th. That's pretty easy. You have a W-2, you've got a couple of little things, you file it. But as a business, there's so many things to look at. There's so many tax documents you need. You need all of your business loan statements, If you have any business vehicles, you need those statements. You need, your books to be all done. So there's a lot to do. And that's after all the 1099s and payroll deadlines, right? So there's a lot to do to get your books ready for March 15. So most of your CPAs are already filing an extension because they just automatically do, because also it's crazy for CPAs to have to get everything done in like 2 minutes. So I know that's happening. The extension deadline is September 15th. So I just want to remind everyone, make sure that your CPA, if your books aren't ready, make sure your CPA or tax professional is filing an extension for you so you don't get hit with any late fees. If you are an S Corp, realize that your pass-through taxes are still due April 15th. Not your tax return. You can file an extension. But like I've kind of explained this before, but I can go over it again real briefly. So as an S Corp is a pass-through entity. So that means that your taxes that would be owed on your profit have to be paid out by you personally. But the good thing about it is that you're not paying like a C Corp. You would pay taxes on the corporation and taxes personally. So you are saving money, but you have to pay the taxes. That means that they're due by April 15th because they're on your personal return. You can file an extension for your personal return as well, but you do have to pay the amount due. So you have to at least get like an estimated amount. Your CPA will tell you an amount that it looks like. Maybe you don't have all the paperwork finished. It still gives you an extra month between March 15th and April 15th to get a lot of it together, but you do have to pay your tax bill by April 15th, so keep that in mind. Now, if you are another kind of entity, like if you are an LLC and you are not elected to be taxed as an S Corp, you're just filing your taxes, then it's a little bit different. Your taxes they're not due March 15th, they're going to be due April 15th, so you have a little bit more time, but keep in mind that's coming up as well, and it's a lot of work to get you there. So I just wanted to tell you guys, remind you of the deadlines. You can absolutely extend. You've got for businesses, for S Corps, and you've got until March 15th. For sole proprietorships, you have until April 15. You can extend until, and for personal as well, April 15. You can extend until October 15. You can extend the business ones until September 15th. And honestly, off the top of my head, I do not remember when the C Corp ones are due. So I apologize. I don't do a lot of C Corps, but they're either March 15th or April 15th. Your CPA will know. Okay, good. I don't see any questions yet, so I can tell that I'm talking about everyone's favorite subject. What do you need for taxes? Okay, so the next thing I wanted to talk about is what is your CPA going to want to see? So on your business side, they're going to want to see a P&L. A P&L is a profit and loss statement. We've talked about this before. It's a very simple report for the most part. It has all of your income on the top. Any cost of goods comes next, and then all of your expenses for your business, and then your profit on the bottom. So that's the most important one for the CPA, for the business, for anything, is your profit and loss. The next one is going to be your balance sheet. Your balance sheet shows, thanks Jessica, yeah, I know it's everyone's favorite subject, like, taxes. And believe me and my bookkeepers have been eyeball deep in getting things ready for taxes, so it's not our favorite subject right now either, but here we are. So, okay, so the next report that you need to give to your CPA or tax preparer is going to be a balance sheet. A balance sheet, again, very simple. It shows the balances of all your accounts. So your bank account, any credit card accounts, any loan accounts, any asset accounts, what are their balances? How much do you owe right now? How much is it worth right now? The other things that you see on the balance sheet are the shareholder distribution or owner's draw, depending on what type of company you have. And this basically shows how much money has been paid out to you in profit, quote unquote, right? I know I get a lot of questions about this. As even the even on the P&L, the bottom where it says, net profit or net income, people are like, but I don't have that money in the bank account. Yes, we know. It's not it's not profit now, it was profit at some point and you spent it. So we do know this. We know you don't have that $150, $250, $2 million in your bank account. Very likely you spent it at some point. But the balance sheet will show what you paid yourself personally, which is going to be similar to what the profit was on the P&L, right? The profit and loss. The one thing to know about the balance sheet is because it's showing balances, it's unless you run a specific report for the year to see how much your distributions were, it's going to show you how much your distributions were since the beginning of the business. And that sometimes confuses people because they go, I didn't give myself 3.2 million this year. No, this year you only gave yourself, a 950,000 profit, whatever it is, but that's from the beginning. So you have to make sure for that specific amount of money that you're looking at, it's going to be, you have to run a report to look for the year because it's going to show the entire balance, right? How much you paid out for all of time. Okay, so that's the two main things. Now, if you are not an S Corp, you also need to collect up all of your 1099s that you've received, give them to your CPA. So that's on the business side. There's other tax forms that you're going to get in the mail. You've got any interest, income for investments, real estate, loans, things like that. Gather everything up. The CPA might need it. Now on the personal side, there's even more documentation needed. So a lot of us, make donations to our favorite charities. You need donation receipts or donation statements for the year for your shouldn't distributions be closed out to retained earnings every year? Yeah, some CPAs do that and some don't, and we don't make that entry, so a lot of the books it just shows open, and we let the CPAs decide on that. That would be nice, but they don't all do it, and when we ask them, they say don't worry about it. So we leave the accounting to the accountants, and I've recently explained bookkeeping as you are the keeper of the historical books. So you're writing exactly what happened throughout the year, and then the accountant figures everything else out for the taxes. But you're not wrong, Daniel. I know you already know that. That would be nice. That would make it easier for people to look at that report. Okay, so now back to what I was saying. So on the personal side, they're going to want to see all the donation statements. If you have medical expenses, and obviously this year for 2021, you get 100% of your taxable income you can count towards donations, or 100% of your donations, right? Whereas other years it's been 50 or 60%, different things. So you definitely want all of those. There's also a $300, tax cash donation that you don't need to show any statements for, but I know a lot of my clients at least are donating a lot of money to charity, so get those statements. The other thing that you're going to want to see is if you've had out-of-pocket medical expenses above your standard deduction, which is like, $12,600 something. I'm not a taxpayer, but so if it's above $12,500, let's just say, then you want to track all of that. You want to send it to your CPA, the amount, because that'll be a tax deduction for you. If you have small children under school age that you're paying for childcare expenses, give that to your CPA. That'll lower your taxable income. There's a lot more things. Oh, your home office expenses, right? So this goes on your personal taxes and not on your business taxes if you are, a business owner working from home that doesn't have an actual office. If you have an outside office, that would go on your business P&L. But if you have a home office, then that goes whatever percentage. So let's say you're using, one room of your house as your dedicated office space. Then the percentage of square footage for that space is what your CPA is going to deduct. So you need all of your utilities, your rent or mortgage, your mortgage interest, any repairs and maintenance, any security, and they're going to do a percentage split to see how much of that you get a tax deduction for. So get all of that documentation. I know that seems like a lot, and people ask me sometimes, oh, well, do you do bookkeeping for personal? I honestly don't, and I very rarely. There's a few clients that I do, and I honestly don't even recommend it because you have so many bank accounts, credit cards, loan accounts, that it just ends up costing a lot of money. But you should be tracking those particular accounts that are tax deductible, or that are not tax deductible necessarily, but tax affecting. Yes, thank you, Daniel. I'm glad I have someone that knows all these actual numbers, because look at me, I'm just like, yeah, above 12,500. Daniel says, remember, the first 7.5% of your adjusted gross income and medical expenses are not deductible. So if it's above that, then you get the deduction. But regardless, give all of the records and the numbers to the CPA so they can make the determination, because that's important. Yes, feel free, Daniel. Any other numbers that I'm missing? Like, what's the standard deduction for this year? Is it 12,965 or something for single and 25,000 married? I'll take numbers, because I didn't do enough research. I've been in the middle of bookkeeping for taxes, so I don't have my numbers written in front of me. I apologize. I'll take numbers. Good. So one of the things you can do to track these things on your personal side is mint.com. I know Jerry recommends Mint a lot on his blueprint. So you can do all of your tracking and just mark them as tax-related expenses. And that way you'll know what they are. Or just keep the receipts, Like it shouldn't be too complicated, because there's only a few categories that are tax deductible. Daniel says he has my back. Thank you, Daniel. Yes, definitely give all the information to your CPA. Exactly, so they can make the determination, because you're not going to know what 7.5% of your adjusted gross income is until they do your taxes, right? Because it's not the same as your profit. So you want to take all your deductions that you can. We want you to pay as least amount of taxes as you possibly can. Okay, good. So what other things do you need to give your CPA? Any tax forms that you get in the mail, you've got 1096, 1099, 1098, anything that has an envelope that says taxes on it, you want that. You need all these records. You also, this year, there's like this letter coming in the mail that tells you what you got paid on your, what do we call that? The stimulus payment. So you need that as well to give to your CPA, because that changes your taxes. Okay, so those are all the things that I can think of. I feel like there was more things on my promo that I was supposed to talk about. But Nano, give me some questions, because you always give me questions. Maybe Nano's in a meeting. Okay, does anybody have any questions about what is needed? I mean, I can basically kind of summarize a little bit for the people watching. Don't mess up your books, please. If you mess up your books, then I have to charge you more to fix them. So I know you're all trying to help, but just make sure you get trained on the workflow correctly. If you're doing invoicing or you're entering bills in your books. Otherwise, just leave it. We'll do it. Send us emails with the information. We'll update it. Nano says, so many arbitraries, that's crazy. Yeah, and that's why it's like, keep track of those things and then just send the information to your CPA, because how are you going to know what your AGI is, your adjusted gross income, until the CPA gets his hands on it and gives you numbers? So just track your medical, your out-of-pocket medical expenses, track your donation expenses, get all the receipts, get any tax forms that come in the mail. Sale of real estate, yes. Sales of assets, closing statements, loan statements, all of that stuff, that's very important. And especially if it's on your business side, we're going to need statements. We can't close out the books without, getting the interest. And you want to give us statements, especially on loans, because all of the interest is tax deductible most of the time in most situations. I'm being very careful what I say now because Daniel's on here. So correct me if I'm wrong. But most of the time, in most situations, your interest is tax deductible. So you do want to give us the loan statements so that we can close it out on your books. One other thing to know, and especially because, we talk a lot about the sacred accounts, the life insurance, payments to your life insurance are not a business deduction. A lot of people have them on their business books, or they have their business paying for it. And, if you want your business to pay for it, I don't personally mind. Be careful of the, piercing the corporate veil type of thing. But realize that we're going to put it as a shareholder distribution, the payments. Just like if you pay your pass-through income taxes out of your business bank account, we're going to show it as a shareholder distribution. We'll label it for you so you can easily see on your balance sheet how much you've paid to, in taxes, how much you've paid in life insurance. But life insurance premiums are not business deductions. I honestly don't know enough on the personal side of how that looks on the personal side, but it's not a business deduction, and that's what I can tell you. So it's not going to show up on your profit and loss statement. As much as it would be really great if it did, it doesn't. Lots of other types of insurance can be business insurance, right? Like let's say you are the only employee that you have in your company, and you make a policy that your company pays for all employees medical insurance. Okay, that's now a business expense because you made a policy. If you get more employees, you're going to have to pay for their insurance too, or stop paying for yours out of the business and change the policy. So keep that in mind. But, things like that, like those things can be deductions on the business side. Also, if you have automobiles that you're using for your business, you want to track the insurance. Obviously, you also need to track the mileage and give your CPA both all of the actual expenses and the mileage that you use for business, so they can make a determination of which one saves you the most money on taxes. But you can definitely track your auto payments, your auto insurance, your gas, your maintenance, all of that can be tracked, as well as your mileage. You should be keeping track. If you have a QuickBooks account, QuickBooks does have an app where you can track mileage. Also, QuickBooks app, you can take pictures of your receipts. So here's another thing I talked to a CPA about this week. When you buy things with cash and you tell us it was for meals and entertainment, or it was for business meals, or it was for travel, we need to know who you paid, and we need the receipts. Most of the time, I don't bug you about receipts. I say, fine, whatever, keep all your receipts. We have the bank statements, we have the credit card statements. Keep them in case the IRS asks for them. But when you spend money in cash, you are going to have to give me the receipts, because otherwise it just looks weird on your P&L. It just shows ATM and then $100 for meals. So keep cash receipts, specifically if they're for business meals. Write down on it who you had a meal with, scan it into your QuickBooks app, email it to me. Don't mail it to me because I don't have any filing cabinets in here, but email it to me, scan it in the app, however you want to send it, and then we'll get it in there correctly for you. The CPA that I talked to recently made a really good point. Everything that you have in your books, think about this. If you ever got an audit, which we never want you to get, you should be able to defend it. You should be able to show how it was a business expense. And if you don't have the receipt, you can't prove it was a business expense. You could have taken that cash and smoke drugs. We have no way of knowing. So keep the receipts, or just don't use cash as much as you possibly can. I know you all walk around with a debit card in your pocket. So use the debit card, use the credit card. Keep it real simple. Okay, Nano, do you have any questions? You always give me such good questions. Daniel, do you have any questions or anything else that you think I should talk about on taxes before I go dive back into my getting ready all my clients for taxes? I take questions. Okay, good. Well, so again, March 15, business S-Corp filing deadline. If you don't know if your tax preparer or CPA is filing an extension for you and you're not ready yet, ask them to file an extension. The likelihood that they're going to get it filed at this point, I think most CPAs are going to have a deadline of March 1st, which is Tuesday. So if you don't have all the information to them by Tuesday, you're going to have to file an extension 99% of the time. Don't forget to, ask them. Most of them are going to do it automatically, but just ask them anyways, just to make sure they're doing it so you don't owe money. If you have an S-Corp, you are going to have a payment due by April 15, so keep that in mind. Unless you get a refund, in which case you're super lucky. Okay, the other thing to note is if you became an S-Corp in 2021 or even in 2020, make sure that you are filing payroll taxes, right? So you need to be running a payroll, filing payroll taxes. If you haven't done it yet, you can still do it. You need to file a manual payroll, do a payroll adjustment so that it goes on your taxes correctly. One of the only reasons up till now that we've ever seen clients get audited based on survey of CPAs is when S-Corps don't have payroll. This isn't the same as just sending yourself money. This is actual payroll with payroll taxes. So if you're an S-Corp and you've been around for more than, a year, get on payroll now. Avoid getting audited. Often S-Corps don't get audited because they usually don't, for whatever reason, surveyed by CPAs. But big red flag if you don't have a payroll. So get that handled. If you need that, reach out to us. We can get it done for you probably by April 15. Not by March 15, but by April 15 we can probably do that. You can always reach out to me and ask questions. Right now I'm at least 2 to 3 weeks out on meetings or starting a new client. But if you file an extension, you need taxes, reach out to me now so we can get you in the line, so we can get it started, get everything ready. You can reach me on Facebook. You can ask questions on this thread. You can ask questions, on my Facebook Messenger. I'm on LinkedIn. I'm on Instagram. Maya Weinreb, Solvency Now Bookkeeping. You can email me, maya@solvencynow.com. My website has a contact form as well, solvencynow.com. So that's the main thing. What do you need to get ready? What do you need to give your CPA for taxes? And please don't mess with your books. All right, good. Well, I think that's all I have to say this week. I'll come up with more exciting bookkeeping things to tell you next week. Same time, same place at The Bottom Line, 7 p.m. Eastern on Thursdays. Thank you all so much for coming, and reach out if you have any questions or there's anything I can help you with. Bye!